Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, daily chart, and you can see we've been building these higher lows all week long. Your green line is the daily mid-band, which comes in this morning around 59.5. I was saying this morning in the daily report and all the written stuff that, they've got to hold that mid-band. And it extends down from the monthly pivot at 57.5 to 59. Now, it had been steady resistance the first, couple of days, but now we've seen with the ADP report at 8:15, we were short, took some profits last night, got stopped out 57.5. At this point, we're long. We canceled that, and now we're long against the 57.5 monthly pivot, because if they're going to start to walk this up Wednesday, Thursday into jobs on Monday, and that's not saying it's going to go straight up like a rocket ship, but that means that we're going to continue this lean to the upside, and you can see it here on the chart. Then we're going to challenge 66.67, resistance from last week, and it puts the upper band at 23.84 into play. And if it's going to be in play, and if the bears are going to demonstrate an inability to get through 40 and create higher lows at 46 and do these kinds of things, the last bastion of sell rallies is the daily mid-band. If that starts to not work, then you have to change your approach, because we're getting back into a dip buy market. And as long as that 57 to 59 holds, depending on how today goes, we return to a dip buy market. So we'll see how that plays out. Now, if the bears are going to save themselves here, they need a very good morning where they push not only back below 57 to 59, but really back below the daily pivot down at 23.54 and stay there. Okay, spend the day down there. That makes this high, that makes this area that we're in right now by the end of the day look like a big old reaction high, and it's a pretty ugly daily candle. Not saying the bears can't do it, but they definitely have their work cut out for them. So over here on the hourly, you can see here was the rejection at S3 Monday morning. Higher low, higher lows, higher highs. Okay? And if that continues, this is where we're headed, 67. Okay? And that is, well within reach of the bulls this morning. And that was resistance from Thursday, Friday of last week. Okay? So respect risk. Understand the dynamic that's happening on longer term stuff. The reason yesterday was so whippy and so ugly at times is that we are battling over longer term inflection points. And when you're dealing down here during the guts of the morning with an area like the weekly pivot, it's going to whip around. Now we're dealing with an even longer term inflection point in the daily midband. Don't think we can't whip around 60 all morning unless the bears or the bulls get a clear breakout or breakdown. We could very well battle for the majority of the morning, trying to see who can keep their advantage with regard to the daily midband. All right, everybody have a fantastic day. I'll catch you for the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.